Hey guys, Reese here. Welcome back to another video today. So today we're keeping with the trend of my last video and talking about asset classes I don't invest in, or in the case of last video, investment strategies I don't follow. In my last video, we chatted about why I don't flip houses and instead invest in long-term buy and hold rental property. And if you're interested in that video, please feel free to check it out. I'll leave a link up here to it. However, with Robinhood and Webull being so popular with the younger generation, which, side note, link in description if you're interested in getting some free stocks through those services. However, that's a tangent there. Investing in the stock market is becoming more and more popular with the younger generation, which is good. I love to see people getting interested in investing and wealth building from a young age. However, today I want to talk about why I don't personally invest in the stock market. Now, everything I talk about today will be from the viewpoint of a long-term investor. I buy long-term when it comes to real estate, and I would invest long-term if I did invest in the stock market. I don't know much about day trading or swing trading, and so I'm not going to speak as though I'm educated on those topics. Instead, today's video, like I said, will cover the reasons why I don't invest in the stock market from a long-term perspective, but instead I choose to invest all of my money into buy and hold rental property following the BRRRR strategy, which I talked about in my last video. So feel free to check that video out if you haven't already. Now, quick disclaimer so I don't get called a hypocrite or anything. I do have a 401k from some of my previous employers, as I was a computer engineer before going into real estate. However, that 401k totals about $1,000, maybe, give or take, and is truly because I forgot to opt out of contributing when I joined my new employer Nationwide at that time. So, full disclosure, I do actually invest in the stock market by mistake. Now, I'm going to keep this video short today, hopefully, because I have found that nobody really watches my videos past 8 to 10 minutes anyway. So, if you have questions on any of these points I bring up today, or you want more details on certain things, feel free to leave a comment below, as I do answer every single comment since it's easy, since I'm a small channel right now. So please feel free to leave comments below. If you're new to the channel, please also feel free to subscribe, as I bring real estate and finance related topics to the channel twice a week. So with that said, guys, the first reason I don't invest in the stock market is the same as the first reason I don't flip houses, which is it doesn't fit my goals. As I said, this is the first reason as to why I don't flip houses as well, and it reinforces the importance of setting your goals. Your goals will help you define your investment criteria, and if you forget about your goals, you'll wander on your path towards building wealth. And so my goal is primarily to build up my cash flow and achieve financial freedom short term. Now, I know with real estate, through my experience, I can achieve at least a 15% return on my money through monthly cash flow. So that's 15% annual paid out monthly. And that's safe and consistent cash flow through annual leases on the property. Meanwhile, safe dividend stocks usually pay out 3 to 4%, give or take. And REITs, or much riskier dividend paying companies, pay anywhere between 7-11%, somewhere in that range. But those dividends are at higher risk of being cut back in an economic downturn. Whereas the rent coming in on a property is locked in for a year, and also when that lease does come up, rental rates don't tend to drop as much as home values or equity prices. So from considering my goals, if I look at these two investments, 15% safely in real estate or 3 to 4% safely in dividend stocks, it's a clear choice according to my goals to invest my money in real estate. Number 2 is the availability of leverage in real estate versus lack thereof in the stock market. Leverage is used in real estate to help you earn more on your money. A $5,000 down payment, if you live in the property, can buy you a $100,000 house. And this doesn't have to be risky if you find a great deal. Now, the average annual appreciation on homes in my market, and I think even nationwide, is around 3%. Actually, in Columbus, a little bit more. And so 3% on that $100,000 is $3,000 in net worth increase every year. That's a 60% return on that $5,000 invested. Combine that with 15% cash flow when I move out of the property and rent it out on that $5,000, and that's a 75% total annual return, just considering cash flow and appreciation, not considering the fact that your tenants are now paying down your mortgage, and you have a lot of tax write-offs when it comes to real estate. Now, this also doesn't even consider value add. What if you throw another $5,000 into that $100,000 house and you turn it into a $115,000 house? That's extremely common, and that's something I do on a slightly bigger level with duplexes, triplexes, and larger properties. However, it's a great way to increase your net worth. Now, in the stock market, you can achieve margin to some level, maybe 2x or 3x your money, but it's very limited. It's also substantially riskier. You can very easily lose money in a trade in the stock market, and if you take out margin or leverage on that trade, you will lose substantially more. In addition, even some of the best long-term traders in the stock market cannot double their money consistently. However, in real estate, you usually can double your money on these value-add investments, and that just goes to show the power of leverage in real estate. Now, 3 is really just that the stock market has a much lower return on average than real estate. As we saw in my second reason, leverage can help you achieve 100+% return in year 1 if you're highly leveraged. And I'm not saying you should be all the time, but it just goes to show that power. However, let's be more conservative in this example and let's put 25% down, which is considered a safe loan-to-value ratio. In my experience, I can still achieve 15% cash flow and 3% annual appreciation. That's not including principal paydown or the tax benefits of owning real estate, but let's keep it simple. Using our $100,000 property example, that appreciation is $3,000 a year off a $25,000 down payment or a 12% annual return. Combine that with the 15% cash on cash, and that's a 27% annual return on only through cash flow and appreciation. That's huge, and that's not at all unrealistic to achieve in real estate. And if you buy value-add deals, you still can achieve upwards of 100% returns on your money. And that's the reason why most millionaires were made through real estate. Conversely, a 27% annual return in the stock market as a long-term investor, not a swing trader or day trader, is very hard to do consistently. Maybe your Warren Buffetts can achieve this, but that's because they buy a very major position in a company that gets them majority voting rights, and they can reposition that company and add substantial value. However, as the average Joe and a small investor, you're really going to have a hard time consistently making 27% on your money a year. The average return in the stock market over the last 100 years is less than 10% a year. And so, in all reality, you can't really expect to make much more than that. And that might make you a millionaire in a couple decades, and it does for many people investing in their 401k consistently. However, I don't want to wait until I'm 50 to be a millionaire. I want it now, preferably, or within the next 5 years. Now, my fourth reason is lack of capital. I've stated this in many videos prior, but I'm not rich. I started this YouTube channel to share my journey to financial freedom and wealth building, and share my mistakes, share any lessons I learn along the way, and hopefully we can share knowledge with each other. Therefore, not being rich, I put about 90% of my money into real estate because I want the majority of my money earning the highest return possible. That other 10% is in a high yield savings account as reserves in case something goes wrong on those rental property investments, leaving nothing for the stock market. With only a couple $100,000 to throw around in different investments, I can't afford at this point to diversify into the stock market or different investment strategies that I don't have knowledge in and that earn significantly less than real estate. Warren Buffett is quoted saying that diversification is protection against ignorance, and I 100% agree with that. And therefore, I'm not going to diversify into a lower yielding investment class, such as the stock market, when real estate can earn me mid 20% return with very little effort and upwards of 100% return with active involvement in the business. And my final and fifth reason is lack of control. As a small investor in the stock market, you have literally no control over the direction of that company. Sure, your shares might have voting interest attached to them, but you have to be pretty ignorant to believe that you have any sway over what direction that company goes. Say you have $5,000 worth of Amazon stock, you might have a minuscule amount of voting rights. However, those hedge funds that have $1 billion worth of Amazon ownership, they're the ones that make the real decisions. I love control, and I love being able to blame no one except myself for a botched investment. If I want to renovate a property, I need no one's approval. If the numbers make sense, I do it. I want to be a business owner and drive my own success. I don't want to have to hope that the CEO of a publicly traded company has the company's or my best interest in mind as an investor. And that's really it, guys. I'm sure there's a few other reasons in there that I've forgotten about today. However, those are my top 5 reasons why I don't invest in the stock market. Now, I know investing in real estate is not for everybody and that the stock market is a reasonable second choice. However, if you're interested in growing your wealth quickly, achieving financial freedom quickly, and you're willing to work for it, I'd highly recommend you start learning more about real estate and seeing if that asset class is something you're interested in. It's already changed my life, and careful investment in real estate can do the same for you as well, which is why I'm so passionate about it and talk about it often on my YouTube channel. So guys, thank you so much. Leave your comments and questions down below. Like this video, and if you're new to the channel, please subscribe. I really appreciate all your support. Thank you so much, everyone, and have a great day.